Alright, let's do a update in the road to $100,000 portfolio, where I try to take a portfolio from $0 to $100,000 as quickly as possible if I had to do it all over again. And the reason for making an episode right now is that, alright, we're getting in on 2 years of this journey. Started there in February of 2024. And now February of 2026 is coming to an end, and a lot has happened since then, and there's some good lessons to learn from it as well. Before we get into that, let's take a quick look at the performance of the portfolio on screen right now. You can see the roughly 45,000 euros contributed, and then we can see 66,000 on the screenshot. However, that one is a little bit behind, and if we do an update, we see that in terms of the actual value of the portfolio, it's 65,000 something euros. And it's been some up and downs. The main holding, MPT, is the ticker now, Medical Properties Trust, is finally starting to get the recognition that it deserves from the stock market, increasing dividend by a cent here now. So second quarter in a row where we have 9 cents a quarter in dividend, and I'm gonna collect a nice juicy paycheck very soon again. And then we have the holding that I'm currently building, Novo Nordisk, taking a big hit yesterday as I'm recording this video. And this is not something new to me. When I first started buying MPW, as it was called back then, well, the stock tanked some more, it was down to 3, I buy a little more at 3, I buy a lot more at 3, then it went up to 4 euros a share again, and then 5, and then down to 4, I buy some more, continue to accumulate. And today the company is recovering. They have nice performance, a very, very boring earnings call that I covered on its own in a separate video. But they are starting to recover with rent escalations on hospitals, mainly in the America region, and doing some more acquisition both in America and in Europe, although only properties worth around $20 million each, so very, very small acute care facilities that they are actually acquiring. Not going to talk too much more about them in this video, but if they continue to perform like that, well, then we're going to get to the goal sooner rather than later. And in the case for Novo Nordisk, this obesity pill maker, I missed out on the whole diabetes run, very, very bad. And I'm not gonna sit on the sideline when the same thing happens in the obesity market. Obviously, we see a lot of competition. We see Pfizer trying to get in on the market. We see Eli Lilly having a strong position, although the pill that they are developing has not launched to the market yet. However, a study comparing a Eli Lilly medication to a Novo Nordisk medication dropped yesterday, and it sent share price tumbling roughly 19%, something like this for Novo. So that's why the stock is down 25% since my purchasing price. And this could not come at a better opportunity, as paycheck is coming very, very soon here as I'm recording this video. And some tax refunds as well. So I will take that opportunity to buy some more shares. We have the ex-date of the Novo Nordisk shares coming up very, very soon as well. So I will be able to collect roughly $1 in dividend from each share that I hold. Price to earnings down to 10 something, starting yield roughly 4% right now. And it's pricing in a lot of negative growth into the share price of Novo Nordisk. So the market with the current price is pricing in that, alright, this stock will not actually grow in terms of revenue. It will decline, and then I extrapolate that out into the future, and I just look at it and I say, there's no way that this company is not going to increase revenues, in 2027, 2028, once this hit from having to lower drug prices in America is over and more volume sold is accounting for the lost revenues from having higher prices, well, then I think that this stock will recover, just like MPT is doing right now, just like Porch Group did for me. I bought at $1, it went down to $0.50, I bought even more, bought a bit on the way up, and you see the price there is roughly $1 now. Same happened with Palantir. I checked, my average purchase price on that stock is $17, and I bought it a lot cheaper, and I bought it a bit more expensive as well. But that's just the nature of the market, and I think a 19% drop on Eli Lilly having slightly better performance in terms of total weight loss that you get from their medication does not warrant a steep drop like that, especially when the market is a bit supply constrained right now, medications being cheaper, and they have great margins on these products. With the lowering of the drug price, it hits the bottom line obviously, but they are still making a profit. This is very, very profitable business in terms of making drugs, selling drugs. The unit economics are amazing. The EBITDA margins are looking great. And that's the kind of business that I want to be in. It reminds me a little bit of software almost, although the margins there are even greater. So thankful to the market for doing a fire sale, just before earnings. So I will put some more money into that one, and let me know if there's any nice dividend stocks that you are purchasing right now, that you are adding to your portfolio, and I'll take a look at them, perhaps make a separate video on it, perhaps add it to the dividend portfolio after I get happy with the size of my Novo Nordisk position. At current prices, I hope to get to 150 shares of Novo Nordisk before I stop buying more of those in favor of diversifying the portfolio a bit. But yeah, that's the 2-year summary. And in terms of learnings, let's share that really, really quickly as well, because the first time I took a portfolio from $0 to $100,000, I did this with growth stocks, and growth stocks are a lot quicker than dividend stocks, which are much more slower and stable by nature. So that's why it's taking 2 years now to date, and it's going to take a little bit longer rather than me doing it in a shorter period of time. And this is what you get, volatility is the price you pay for larger returns. Obviously I've looked at a lot riskier dividend stocks than most, but yeah, it's still going a lot slower than growth stocks. So that's the learnings. And does that mean that dividend is bad? No, absolutely not. Over these 2 years, there's one thing that I appreciate a lot about these dividend stocks, and it's in the name, it's the dividend. It's a very, very easy way to start to actually consume, to live off of the investments. And why do I mention this? Well, because if you are in the accumulation phase, you've been adding assets, you've been buying, it's very difficult to flip a switch and then start selling assets and splurging that on, trips, going to nice warm countries. But it's a lot easier to start spending the dividends. You get that juicy paycheck from MPT, you get a nice one from Orion Properties, something like this, just taking that money and buying a trip or something. So I think that's a way to phase in, get the habit, training the spending muscles, and just preparing for flipping that switch, which we all have to do if we want to retire one day to where you're no longer just accumulating assets, but you're more starting to sell off. And Dividend has that very nice psychological benefit of easing you into that type of lifestyle. Anyways, that's been it for this video, covering the roughly 2-year mark now of working on this Dividend portfolio here, and very happy with the income stream that has been built. It's quite the juicy dividends now. As always, hope you guys make a ton of money, whatever investments you decide to make. Alright, take care now. Bye bye.